There is a twist when it comes to the SPAC frenzy on Wall Street. By the way, at least two more that I picked up, Leslie, that were priced last night. But explain to us what you mean by that.
Yeah, they just keep coming, David. If you boil down SPACs and private equity, though, to their most simplistic definitions, they actually sound pretty similar. You raise capital from outside investors to fund deals. Of course, SPACs typically take private companies public, and buyouts can often take public companies private, among other major key differences. But this year's SPAC frenzy, which we've been covering this week in our segment called SPAC in Action, is shifting attention to the private equity model. Here's BlackRock's Larry Fink, who said last month that the SPAC frenzy could put pressure on the buyout industry.
In many cases, I think SPACs could replace many private equity platforms because they could be another avenue for organizations or subsidiaries of organizations to be spun out. So if SPACs continue to grow in importance, I do believe it's going to be pressure on some private equity because you're going to see more money moving into these type of organizations.
Now, the concern of some is that the excess of new capital from SPACs will be chasing the same supply of deals, driving up valuations. Now, that's not always true. Not every target would benefit by a reverse merger into the public markets, just like not every capital structure would benefit from some sort of debt through a leveraged buyout. But sources that advise on these deals have told me that competition is fierce to find targets, and in some cases, that's causing hasty due diligence and a willingness to pay higher valuations. But rather than sit out on the sideline, traditional private equity is actually getting into the SPAC game in a big way. Apollo Global, TPG, Cerberus, Oaktree, and Fortress have all raised SPACs of their own this year, guys.
Yeah, I mean, Apollo did one last night. Spartan acquisition, too, as you know.
Upsized SPAC last night.
But, you know, you raise an interesting point in a number of different areas, Leslie. One is, of course, the question of declining quality as so much money chases fewer deals, perhaps. We've seen some of these companies that wouldn't otherwise go public at this point. They're very early in their gestation. So that's got to be a concern, you know, years till profitability. But then to your point, what I'm hearing more of, and I'm sure you are, is, well, we might be there for a carve-out from a company, from a divestiture from a company. At least we should be considered in that conversation when a company is thinking of selling a division or doing something along those lines.
Absolutely. It is opening up more possibilities for private equity firms. You bring up a good point. As actual sellers of their portfolio companies, if maybe the IPO markets, the traditional IPO markets, aren't the route that they think they could get the highest valuation, maybe a SPAC is actually better for them. They could wind up selling their own portfolio companies to other SPACs, even if they have their own SPACs that they're running. Another conversation that's actually happening a lot in Silicon Valley is VCs are listing their own SPACs and have considered, although this hasn't actually happened yet, but there have been discussions about potentially acquiring portfolio companies of their own through their SPAC out of their actual venture capital fund, which, of course, raises all sorts of challenges at the board level and with their fellow VCs who have invested in these companies. But all really interesting considerations. And I do think we'll start to hear more with regard to conflicts of interest that arise in these worlds, too.
That would be certainly a conflict. But, yeah, Wall Street will always go as close as it can, if not way over the line in terms of pursuing conflicts, if it means actual ability to make money. Leslie, thank you for your continued coverage of this important area.
Shepard Smith here. Thanks for watching CNBC on YouTube.